state level, it's a little different, of course, and typically we do it at the state level because we don't have forecasts at a more regional or county level.
Yeah,
But every county looks a little different. The regions looks a little different. Obviously, different levels of, let's say, um, price bucket, they may look a little different depending on the situation, depending on, the conditions with the price segment. So
yeah,
things could be very different. And sometimes, when you listen to our forecast, which typically we do that like we update the numbers every 6 months or so. When you listen to something that we recorded, let's say in October, it may not, and you listen to it, let's say March, it may be a little different, comparing, what happened a few months ago. So there are a lot of things that went on in the last, few months, and I think it's right to kind of talk about it.
well, I'm excited, and one of the main reasons is because I've always found car numbers to be good.
Oh, thank you.
Like depending on other sources, I look at them, and then 6 months later, they're like completely different, and I'm like, ah. I track. I download the Zillow's estimates, the historicals estimates, and they always change. Like they backdate them. They're like, oh, we don't really think that that's what happened 6 years ago, and it's anyway, it's interesting. So I have to go back, and wherever I add in the new set of numbers, I'm like I have to adjust them to kind of so there's not a big jump up or down in the markets. And anyway,
Yeah, I
uh,
mean, and I can understand for Zillow, for NAR, for Realtor.com, they may actually make some adjustment every now and then because of rebenchmarking and things like that.
yeah,
We don't do that as often. Not that we won't do it, but we usually give enough background information to people who read, the numbers, and hopefully that will provide some additional insights.
right. Well, I'm really a purist. And what I mean by that is I just download everything because I'm in Sacramento area. So I download everything from the MLS and then just go, okay, what's the average? What's the median? And it's like, well, that's what the number is. And
Hmm.
how many sold, what's the variation between month to month, quarter to quarter, year to year, things like that. And so I try and get it as close as possible. I hate it. Well, I don't hate it, but I really just like it when they do like, well, this is annualized. I'm like, okay, I understand. Like, are we on target to have more or less this year? Like the NAR does that all the time. And I'm like, don't give me annualized numbers every month. Like, give me the actual numbers and then say, okay, this is how many we think we're going to have this next year based on how many we have. And they always do annualized numbers. So, okay, we're in May. Well, annualized numbers for April are all the way through to next April. And well, but do I care? I don't care.
And I
Hmm.
understand we do that too. I'll be, very honest. We do the same thing too, annualized, seasonally adjusted. Yeah, it's for comparison purposes. But when we do regional and as well as some county level data, we provide typically we provide the year-over-year percent change rather than
Yeah,
the actual number. But we
yeah,
started actually, giving out, the actual number of units. And there are caveats. Of course, each county, each cities, we may have. There's a little caveat here and there, but we don't we. There are so many different counties and different cities, and we actually put notes every single one. Of course, you won't be able to see, our reports. So I think it's good to kind of talk about it, to have a chance to talk to members, to talk to you, talk to Mike about, what's going on. I think that gives, a little bit more context to what's going on with the
well, you
market.
said there's a lot of changes over the last couple of months. So what are you seeing?
Well, the last couple months, of course, it depends on when we look at changes, of course, it goes back, even further than that. But the last couple months, because of, what's going on with the war, just to focus on the last few weeks,
Yeah.
we thought, of course, inflation seems to be coming down, so interest rates should be coming down as much as well. But it looks like, of course, things fluctuated a little bit, especially since the end of February when U.S. and Iran, started, war. The Middle East conflict really pushed interest rates up. Now, I've heard anecdotally, and I'm not in the market myself, doing the transactions, but I've heard anecdotally, of course, at the beginning, people are concerned. Buyers, sellers are concerned. Okay, what's going to happen? Interest rate jumped 50 basis points or so. What's going to happen? But then it lasted for more than a week, 2 weeks, 3 weeks, 4 weeks or so. So interest rate climbed and then started coming back. I think, in the market, buyers and sellers started realizing, well, this actually could go on for a little longer. Now, we may not necessarily have to wait until interest rates start coming down because look, this is the buying season, right?
Yeah.
We're moving into April, May, and June, and so on and so forth. So people start realizing, okay, well, if and we tell them the same thing too. If you see a house or see a property that you like, you can always adjust interest rate later. Now, the question, of course, is whether you believe that prices are going to continue to improve or are going to go down. A lot of people think prices are going to go down. I'm not going to buy it right now. But that's what people have been thinking, right, for years, right? Every single time they see something, they're going to think the prices are going to go down. It does, prices do go down every now and then. We can talk more about that later.
Yeah, what do you think? I mean, I know this is kind of like pulling the rabbit out of the hat. I've literally spent a couple of decades trying to understand, okay, what makes a market go, and just when I think that I've got it, I like something else happens and everything completely shifts, and I'm like, oh, okay, so I really don't have a clue. But I ask you because I'm very excited to hear your opinion of like you've been looking at this for decades and what are some of the things that you've seen and then kind of where does that indicate?
Well, some of the things that we have been seeing, if you just look at it, 1 year or 6 months or so, you might think, well, things fluctuate a lot, so
Yeah.
it's hard to gauge. But I think it's good to take a step back and look at, a little bit more longer term. A couple of things that both you and Mike know already. Um, Price wise, compared to let's say 5 years, 10 years, 20 years ago, we actually have gone up. We've gone up quite a bit, in
Oh
fact.
yeah.
Hmm.
So in the long run, prices will continue to go up. And the reason why that is the case, I think you both of you know already. Supply in California, we have talked about supply constraint. We said it before COVID that we have a supply issue. California has a supply issues. That issues has been going on for what 10, 20, 30, 40 years because of all the things about regulations and some of the policies that we can talk a little bit more about later on. And those are actually not those have not been changing, for the last 10, 20, 30 years. So because of tight supply, because of the ongoing increase in prices, we are going to continue to see some price movement upward. Now, the question that I have, of course, is whether it's going to maintain the same growth pace that we saw in the last, let's say 10 years or, 5 years. We might actually see a bit more price growth in 2020, 2021, 2022, but the pace of growth probably will moderate. I don't think, we're going to see any long-term price decline, but I think that growth pace probably will be a little bit more moderate compared to what we have seen in the past.
Yeah, that's kind of my impression. I feel like we're closer to the top. When we went over
But that's what we.
700,000 as the median California, let's see, could you track counties? And we were looking at anyway. Sorry, I was looking at all the numbers. I was digging into them, and like the all of California was like over 700, and I couldn't believe it. I think Sacramento was like a 400. I'm like, how can people afford 700? No matter where you live. I mean, if you're in the Bay Area and you're in
Mhm.
a tech job, yeah, you can probably afford that. But it just so many places, people are still going to their five and dime, and somebody works there at the counter and at the dollar stores, and they're not making $80 an hour at their
Right, right.
jobs. And,
Well,
and so
Joel,
anyway,
if you think about it, when you said we're close to the top, how many times in the past have we said we're close to the top? I mean, I remember saying that in the 80s
well,
and
Mike, I,
saying
I
it in the
regretted
90s.
saying it as soon as I said
Yeah, it's
it.
just there. where is the top? I'm not sure. 15 years from now, we're going to look back and say, well, we were close to the top. No, we weren't. Because 10 to 15
Yeah.
years from now, it doesn't seem to stop.
I agree with both of you. I think it's going to be higher now than where in 5 years than where it is now. And that's why I say I regretted saying at the top, because normally, you think of it as it goes up and then it goes back down. But I don't really
It,
get the
it,
sense that it's going to
it,
go back down from here.
no, it always exceeds the previous high.
Yeah.
And it never goes down to the previous low. So I, I think the way we need to look at it is, how are we going to be affected in the future? Is there going to be an adjustment? Yes. But the question is how deep is that adjustment going to be? Not going to be that deep. It could be a
Yeah, I don't think so.
10%, could be maybe 15%. But California is so diversified in so many different markets that you have one area doing one thing and another area doing another thing. So you can't compare Bay Area with Sacramento. You can't compare LA with San Jose, or it's just we have these satellite areas that do different things to the
Yeah,
rest of the state. But overall, it keeps going up over
right. And,
time.
and that's why I was amazed when it's over 700. But, each market's a little bit different. And I'm amazed that, people can still afford down in LA. Oscar, what's your take on that? Just the how expensive, especially the coast, the Bay Area and Southern California is.
Yeah, I think, California, well, the major metropolitan areas, safe to say they have been growing, right? In the Bay Area, for example, which is closer to Sacramento, we have been seeing prices increasing by, increasing to San Francisco, for example. I think the median is right around like 2 million or so, maybe even a little bit higher than that. Some of the other areas like San Mateo, Santa Clara, they're at 1.5 million or so. They actually have been rising. And it has something to do, of course, with the fact that we have, the tech jobs, we have tech companies there.
Yeah.
But we're seeing actually slower growth in tech, and in the Bay Area also. Part of it also could be because of, we have some earlier part of the year, we have some volatility in the stock market, and a lot of people feel wealthy when the stock portfolio is a little bit more, is a little bit higher, right? So it's actually not growing as fast, but it's still growing. LA and Orange County and San Diego, they're still, inching up um, by on a year-over-year basis. Earlier, it was inching up by maybe about 1 or 2%. It's not growing very fast, but it's growing. And I think we are going to see in some areas, we are probably going to see, this year, for example, prices may be leveling off a little bit. And the leveling off could be because of a couple of things, the uncertainty, but also the fact that, still have interest rate at around, 6.5%. We previously thought it would actually come back down, but it started actually, elevating again because of the uncertainty in the war, the gas prices going up. So all these are actually going to, keep, um, some uncertainty in the market. But at the same time, I'm surprised that despite, the uncertainty that we have been seeing, the economy actually is doing okay, and that's why housing is still in demand. Just look at the local area. You probably Sacramento has been, pretty it's been booming, and because of the price level, being a little bit lower compared to Bay Area, and the fact that people may be able to work remotely, allow, maybe a little bit more housing to be built in Sacramento, and the demand continue to improve. I
Yeah.
may not be increasing 10%, 15% in terms of price, but safe to say it probably is still at a price higher than, what we saw 2 years, 3 years, 4 years ago. How can people afford it? I think a couple of things. The people who can afford to buy, that
Hmm.
you can see that, that are buying homes, they are the ones that who might have saved enough money, and they might actually be the ones that are in, let's say, Gen X. They actually saved some money, and now they're ready to buy. Now, those people who are not afford to buy, and there are probably more than what we used to see before, they're still living with their family. They're still living with, their folks. So there are some pent-up demand if we actually have interest rates start, coming down closer to 6%, that could actually lead to a little bit more sales activity. But because of that affordability issues, rates remaining high, prices remaining high, um, we're not seeing those sales activities increasing like what or showing what the level that we used to see back in the pandemic, back in a pre-COVID level. And we can talk more about that also about, whether we're going to see some improvement. I think, one of the questions that you ask is, where are we in the cycle, right? Where are we
Yeah,
in the housing market cycle? I think we are definitely, in my opinion, I definitely think we have already bottomed out, but we're not actually too far up, the climb. We
yeah.
thought we could be more closer to maybe about from the bottom, maybe about 10%, 15%, but we're not there. We used to be about probably about at least 50 to 60% above the bottom. But
Mhm.
right now we're still, climbing up because of these different uncertainties, because of the inflation and because of interest rates. Um, I think it's
I,
going to take a few years to get well, for us to really get
Yeah.
there.
I think so.
One
I
thing,
think I
one
came
thing
up with, go
yeah, let
ahead.
me ask this. One thing too about what's going on in the Bay Area opposed to Sacramento, there is no more land in the Bay Area to be able to build new subdivisions. So basically, like San Francisco, they tear it down and build up another house on top of it. So when you look at California, look at Sacramento, there's so much land available that they can sprawl out, and that keeps the price point more controlled. Where Bay Area, San Jose, and some of the other areas, they're pretty well built out. Now, do you agree with that, or do you think that also causes the values to keep going up? Like New York. New York is there. There's no more land. You start spreading out, and you get to the ocean. So that's why they tear things down and then build and rebuild new things.
I think it depends on, how you look at it. So, and in the areas as well. Um,
Hmm.
you definitely see a bit more building activities in Sacramento as compared to, say, um, the San Mateo or Santa Clara or some of the
Hmm.
more dense area, or in LA. We used to see in downtown area a lot of building of high-rise building in downtown areas, but more suburban areas, maybe not as much. Um, of course, a lot has to do with, the regulations, the policies being made.
Right.
I think prior in the before the last few years, maybe before 2020, there's a lot of restrictions on. There's still a lot of restrictions, but regulations and restrictions on, CEQA, right? A lot of restrictions on, land use. In the last couple years, last 3, 4 years or so, we are seeing a little bit of loosening up because, politicians realize, hey, we really need to, this housing affordability is definitely an issue. We need to really do something about it, whether it be from the supply side or the demand side. The demand side would
Hmm.
be maybe lower the cost, maybe yeah, have some programs available to help first-time buyers to get into the market, maybe have some sort of programs to help them come up with some down payments. So that's the demand side. On the supply side, we also have to, maybe loosen up some of the restrictions. Some of the things that you've seen, allowing homeowners to build ADUs, for example. That allows people not necessarily to be able to buy a home, but at least be able to have a little bit more housing units available for rent or for what for
Yeah,
other purposes.
I think that's one of the best things that best piece of legislation that they've passed. Those two or
Hmm.
three pieces of legislation allow more density, more
Right,
people to easily build EDUs. So
right.
Right.
And
The
and
other thing from my perspective is Sacramento is affordable to the Bay Area.
mhm.
Sacramento
Yeah.
is not affordable to the local people. So what do the local people do? They go to a different market, Stockton, wherever, Lodi, and that's affordable to them. So everything kind of rolls downhill. And so affordability is kind of an interesting word because Bay
It's all
Area,
relative.
Sacramento's it's all relative. So
Right, right.
Sacramento is affordable, but not to everybody,
Right. Now,
right?
and I'm glad that you brought that up, Mike. So, when we look at housing affordability, right, we look at, okay, well, let's look at the household income in that area.
Hmm.
Let's look at how many people can afford to buy in that area based on let's say, the median price home and things like that. So here's an interesting concept, and I'm glad that you brought it up. When we look at those numbers, we have to, of course, take it with a grain of salt and also take into, to have some background information as well. You said it earlier, Mike. Um, when let's say, people in Sacramento, the home prices actually increased, by 3 or 4%. That
Hmm.
may not be affordable for some people who live there. And then because of the ability to work remotely, people work in the Bay Area might actually move to the area to Sacramento, stay for, work there for 2, 3 days, work in the office for 2, 3 days, but then they have the ability to buy because they have a higher income. But when that happens, you also have some migrations for people for Sacramento for from people who are live in the Bay Area to move in the area uh, that typically have a lower household income than people who live in the Bay Area. When that happen, it might have artificially push up the household income in Sacramento, for example. But those people who originally live in the same area, their household income may not have increased. So yes, they might have to actually move to some of the other counties, but not everyone has that capability of or ability to move and work remotely. So that makes
Correct.
things a lot tougher in some areas.
Correct. Correct. That makes sense.
Yeah. What are you seeing, Oscar, in um, like the Central Valley? How's the Central Valley reacting?
You know, when we look at, we see some counties are actually doing what what Sacramento has been doing. Maybe building a bit more, right?
Mhm.
Because at least for 2020, 2021, 2022, or maybe not 2022, but 2020 and 2021, we thought, a lot of people thought, okay, well, maybe, this remote working is going to be a trend. Instead of maybe only 10% of people working from home, there could be 25, 30, 40. So, hey, building more homes in Sacramento or some of the other areas may actually work. And I think it works for certain counties. Sacramento, it
Mhm.
seems like it's doing okay.
Yeah.
There are definitely a lot more sales activity compared to before. But some of the areas may not necessarily be a little bit more inland, maybe not so much. I mean, use Southern California as an example. Riverside, San Bernardino, they're more inland, so they're not Central Valley, but they're a little bit more inland. But a lot of people move there hoping that, okay, well, we can have this remote working for a while. I mean, we do have a higher percent of people work remotely, so it allows people to stay there. But at the same time, here are some of the things. When well, this is similar to, what happened in 2004, 5, and 6.
Hmm.
We had a lot of activities back in 2003, 4, and 5. A lot of homes being built in Riverside, San Bernardino, maybe in Sacramento as well. But in order for people to move there, in addition to being able to work remotely, you also have to have other businesses move there as well, so that
Yeah.
you can also have that economy continue to grow. Now, some areas may be actually growing, areas maybe not as much. If we need to move further inland, some of the more Central Valley areas, you probably know, may not necessarily be growing as fast. Um, Plumas, maybe, for example, maybe not growing as fast. Yuba, maybe not growing as fast.
Mhm.
But, you know, as far as affordability is concerned, yes, people can move there and, hopefully, help the economy as well as housing to boom. But that takes time. For people
Yeah.
to move there and then live there, you also have to bring all these businesses to be there in order for the local people to continue to improve economically, as well as for personal finance. So this is not something that could actually you can just make it happen overnight. Um,
Right.
Obviously, there are reasons why the coastal areas continue to have higher prices, weather-wise, climate-wise, all the
It is
different
nicer on the
reasons.
coast.
All the
Yeah.
different reasons. Maybe also for some of the investors that you guys have been dealing with, you probably know coastal areas, their value tend to be able to kept up, a bit, stay elevated for a little longer. They don't
Yeah.
necessarily go down that much, but some of the areas may not necessarily be the case. So, I think it's most of the time people treat their house as their primary residence, but there are definitely investors. You already know that.
Hmm.
You guys
Hmm.
work with a lot of investors on a regular basis.
Yeah.
Um,
Hmm.
so, with investors' interest plus, of course, a demand from primary home buyers, that's probably one of the reasons why home prices actually have been kept up um, at a level in the coastal areas as much. But obviously, it may be actually extending to a little bit more inland because of housing affordability issue.
Hmm.
Yeah. One of
So
the
have you,
uh,
okay, go ahead, Joel.
one of the numbers that I've wanted to track and I haven't done it yet is by county is just price change and well number of sales relative to the population, the number of units in the marketplace. That is, what percentage of the overall units are selling. And I did kind of a quick thing in the Bay Area and in Sacramento, to see the comparison, and
Hmm.
that the higher priced areas definitely sold less number of units. So supply demand, they have less number of units. Well, not overall number, but there's less number of units selling, and but then you have the same population, let's say a million in two different markets, but one will sell 2% of those, and the other one will sell 1% of those. And it seems to be a correlation between price and that. But I just did kind of a straw poll using San Francisco and a couple places in the Bay Area and Sacramento area. But
Yeah, I
I
think
always
it will
thought that would
be.
be interesting. Just
I think it will be, fascinating to look at, the analysis that you just suggested. When we look at, of course, demand, we want to look at um, population growth. We want to look at
yeah,
not just population growth, but also, the type of the people who live there by generation, by age, to see whether, they are just there for, like, of course, some people live in, let's say, Lake Tahoe because it's a vacation area. So it's a little different compared to, an area where we have primary homeowners. So it will be interesting to take a look at those population growth, um, and of course take a look at by segments, by income segments. Of course, it's a very detailed analysis to look at. There are some people who might have done that and something similar before. I think Berkeley might have done something in the past on these kind of analysis, maybe not as a city level, but maybe at a county or regional level. So it's fascinating, to see, how we can actually take a look at those studies and maybe apply to, what could happen with demand, and then by looking at the demand, what could happen to, supply. Now, one thing though to keep in mind which could be a little challenging, is when we look at these population growth number, look at this demand number, it's always looking back at the rear view mirror, right?
oh yeah,
With things that doesn't necessarily account for what's going to happen with technology.
right,
With technology, things could change. You could have, or nobody predicted what's going to happen with COVID, uh, with interest rates or with people working remote. Those kind of things change the migration pattern and
yeah,
change the housing demand and supply. And that's really hard to predict, but that's I mean, you can only base it on what happened maybe in the last 10, 12 to 10, 20 years or so. If we can all predict the future, then we don't really have to worry about, what's going on, right? But, unfortunately, it's hard to predict, what's going to happen in the next five,
Yeah.
10 years.
Yeah. Well,
So
with regard to,
Oscar,
go ahead,
here's
Mike.
here's a question. We talk about home ownership. What about tenants? What about non-owner occupied? What's that affected in California? We now have rent control. Those created some issues, good, bad, indifference. What are you seeing across the state for affordable housing, rents? Um, can people afford to live in the Bay Area and rent an apartment? Can people afford to live in Sacramento or any of the other markets? And what's the demand for that? Because that's all part of housing.
Mhm.
They may not be able to buy, but they got to live somewhere.
Yeah. Well, rent control, if you'll ask, let's say, 100 economists, most of them are probably going to tell you that rent control is not necessarily the best way to uh, control, rent growth. And the reason why that is the case is there are a lot of, multifaceted, answers to that. Of course, rent
Hmm.
control will lead to if you control rent in one area, people will go out of the area, and then the rent growth in outside of that rent control area would actually increase significantly, and actually that would lead to maybe more people not being able to afford a house, in general, not just in that rent growth area. But if you look at the rent growth in general, in the last few years, uh, both of you already know. Uh, a lot of people also rent from, multifamily units, right? And
Right.
multifamily supply actually has been increasing. Not so much, not maybe not so much in LA or some of the major metropolitan areas in California, but in general at the national level, multifamily actually has been increasing, and that's because of what happened, during COVID. People thought, okay, well, we can build, well, we don't have enough housing to buy, so let's build, a lot of multifamily homes, and that actually, but the building takes time, right? It's the building, building a home takes time, and things did not come out, come to the service until 2023, 2024. So we had a flood of supply actually moving into, as rental units in the last few years. And it's will probably continue to go on, in 2026, maybe a little bit in 2027. And so rent growth actually has been, to me, in general, not so much, maybe not as much in California, has been contained in terms of, the increase. We have a vacancy rate at a higher rate compared to before in 2023 and 4 and 5.
Mm.
But in 2026, I think things are actually moderating. I saw some numbers recently that shows that vacancy rate might have actually bottomed out. So which means rent growth probably will start seeing a little bit more improvement in the at least going into the the sort of a quote unquote moving season. We'll probably see a lot of college kids moving as well. Will see some improvement in rent growth, but I still see supply coming on to the market, so that actually could lead to maybe some moderation in rent growth. From the investor's perspective, I think if you are holding on to a property for a long run, let's say 5 years, 10 years, I think, we still have, there are still a lot of people who want to rent or need to rent, especially since interest rates may not necessarily come down so soon.
Yeah.
Hmm.
Um, we probably will continue to see some moderate rent growth. But in California, um, it's going to be a little bit hard. We actually saw California rent growth a little bit higher compared to the national level,
Mhm.
but at the same time,
You're talking about price of rents over time, right? That the price is increasing. That's what you
yes,
mean by rent growth.
rent, yes, oh, year
Yep.
over year change in price
Okay.
and rent.
Rent
So
prices.
yeah. So we may actually see, we might have seen some positive rent growth, for LA or um, for the Bay Area in the last, few months or so. Prior to that, we may actually not have seen, a whole lot of growth because of the supply. But going back to, whether people can afford, um, I think, again, if you just read the numbers, if you're just looking at the data, it seems like, hey, it seems like it's pretty healthy. It seems things seems to be okay. But I'll go back to what I said earlier. Um, a lot of people who cannot afford to buy, they're actually staying with their parents, or
Correct.
they're actually combining, households into one. Like, supposedly, uh, two college students should be renting their own units, but because they cannot afford to rent, they actually combine their income. They actually stay with the same within the same units, so same households.
Right. Right.
So there is going we I would say we do have some pent up demand for renters. They're waiting for rent to maybe come back down a little bit, or waiting for them to actually increase their income a little bit more. So it delayed some of the potential renters to actually rent. So to answer your question, Mike, housing, the affordability for buying a home versus and renting a home, it's still it's pretty low for for California, and probably for the at the national level. But it may not necessarily show as much because now we're not seeing the head counts increasing as fast because people
Hmm.
cannot afford to move out.
Hmm.
Right. Now, what about migration? I mean, I've heard on the news, and I don't follow the news very much, but my understanding is over the last several years, there's been out migration in California. We're still growing, but not as fast as the nation as a whole. Uh,
Well, if
I
you
think, what, don't we have net negative? I think a year ago we had net
hmm,
negative migration.
okay.
so if we look at California, um, before COVID, we had, while population continued to grow, right? Now, out-migration is something that happens, all the time.
Oh yeah.
The
Yeah.
question is whether we have a positive or net, migration.
Yeah.
So our migration happens all the time, but during
Hmm.
COVID or after COVID, we have more people migrating to other areas because of the factors that I've mentioned before. That people can work remotely. They don't necessarily have to go to uh, stay in California, especially for tech companies, right? Tech companies, a lot of people, a lot of tech workers, they're able to work in Colorado, work in some other places that can buy a home, or move to a place that actually would be much cheaper. Now things actually changed a little bit. I think we did have net out migration in 2021, 2020, 2021, 2022. We thought things actually California we thought, in California, the migration actually started slowing down in 2023 and 2024. We thought, okay, well, things actually started improving a little bit. At the same time, you know, uh, when we look at migration, we also look at, population growth and all that other stuff. But we can talk about population growth in a minute. But
Yeah.
migration, we started seeing more people moving. But at the same time, going back to what I said, when the labor market actually started tightening up, we were doing very well, but then the labor market started tightening up in 2024 or so. So
Mhm.
workers have less leverage. So if your employer wants you to work from home, well, work in the office, then if you live, let's say, 200 miles away from where you live, that's not going to work for the employer. Now, workers had a little bit more leverage before because the market was doing very well. The labor market was doing very well. But then when
Yeah.
the market tightened up, of course, you have to find where the jobs are. So people start moving back, and moving, back in California. But last year, it's true, Mike, we started seeing the out migrations picking up again. We started
Hmm.
seeing and I should rephrase it. We started seeing the population growth actually start shrinking again. There could be a lot of different reasons. One reason, of course, is we did have a change in the immigration policies. We had, a tightening up in the undocumented migrant
Oh
that
yeah.
might actually cause population to come down. But we also might have, more out migrations because of we did have last year, we did have some layoffs. Um, you know, AI is great. it did improve our lives, probably. It did help some of us in improving our efficiency, but at the same time, if you look at those tech companies, they did replace people. People who
Hmm.
did not have a job, they have to actually go somewhere else, maybe can't live in California and moves out to other places. But also, um, in addition to tech workers or some people who cannot afford to live in California to move out, there are probably people who are we're in an aging economy, not only in California, but nation as a
Right.
whole. When people, there are two things that could happen. When people start getting a little older, either they stay and age at home, or they stay a little longer in the place where they're living right now, or they decide to cash out and move to something a little bit more inexpensive.
Right.
Hmm.
So we're seeing a little bit of both. Um, I think it also depends on how the financial market behaves as well. If the financial
Yeah,
market behaves well,
yeah, do you
then maybe
mean
not.
Wall Street or do you mean just the
Wall Street.
economy generally? Okay.
Yeah, Wall Street, if Wall Street is actually doing well, then people feel a little bit more wealthy. They don't think they necessarily need to move. Now,
Hmm.
if Wall Street actually started looking not as great, then people start thinking, well, maybe I need to move because I don't have as much money as before, and let me cash out before the housing market starts slowing down. So I move to some other areas and buy another property. But I think it's easier said than done. When you move to another area, when people said, people move to another area, they're only thinking of the financial perspective, right? Yeah, I'm gonna sell this house. I'm gonna move to this place. I'm gonna have some money to spend.
Right.
Um, but the other perspective, of course, is even if you're getting a little older, if you were to move, you're leaving behind your friends. Some places that you're familiar with. Some people, if they don't have to, if it's not for financial reason, they may not necessarily need to move. So it really
Right.
depends on the financial reasons behind it, and whether people will have the desire to do so.
Well,
Don't
and
you
when you're
think that
tracking, go
don't you
ahead.
think that a lot of people would be moving for quality of life? It's not also financial, it is a part of the equation, but Joel and I have talked to a lot of people across the country, and they are migrating to,
You're tired of having Californians arrive.
well, yeah. Well, they're migrating to areas that allow them to have the same mindset, whatever that is.
Yeah.
And if they don't get along with where they're living and they have a lot of challenges, they're going to relocate to an area that is going to work for them, whether it's I mean, you go to places like Tennessee, and that's the Bible Belt. So if you're religious and you like churches and you like the way people communicate and the politeness and all that stuff, when you travel around the United States, it's a real eye opener. I mean, it blew me away when I started driving around and talking to people. So I don't think the major decision, it is a decision, is financial, but a lot of it is quality of life and how they can fit into their local areas. That's
I,
just from my perspective, because that's what I did.
yeah, I do believe, and Mike, I think you're right. I do believe a lot of people move out of California because of the many
Hmm.
different reasons that you mentioned. Maybe the
Even
quality of
even
life.
in California, they'll say, "Oh, I like this place much better. I fit in better. It just works better for me." Because there's a lot of diversity in the state of California too.
Oh, absolutely.
Yeah.
And of course, if we all have, the if we all, have the ability to move based on where we want to live without the consideration of some of the finances, some of the, let's say, we're not only looking at talking about, people who have retired. Let's say, for people who also are in the working force, if they have the ability to move, and that's what happened during, in 2020 and 2021 too, that people want to move to an area that has a little bit more, let's say, closer to nature, right?
Mm-hmm.
Right.
Like El Dorado County is a great county.
Mm-hmm.
Yeah, many of you, some of you may know, you may know already. El Dorado is a big, pretty good county. A lot of nature.
Mm-hmm.
But at the same time, of course, uh, people have to be concerned about, whether that area has the businesses, or whether they will be able to sustain their financial well-being, by living there, because now they're not as close to their jobs. So, if for people who are ready to retire, and they don't have to worry about whether they need to be closer to their jobs, I think they have that financial capability and
Mm-hmm.
also the flexibility to move to some other places. So in California, so California has obviously has a disadvantage in the sense that, living in California versus living somewhere else probably will cost a bit more living in California. So that's one additional disadvantage, right? If the income that you're making is not growing as fast as your cost of living, or keeping up with it, then obviously there are more incentive to live to move somewhere.
Mm-hmm.
And there
Right.
are places, there are a lot of places, not just, in the US, but all over the world as well, that people want to move to. Um, what I am also saying is, what I'm wondering is, I don't have those specific numbers in front of me. What I'm wondering is, um, when we talk about outmigration, whether we are seeing more people actually moving out of California or moving in California. Now, the people who move into California a lot of time could be because of um, job security.
Mm-hmm.
Um, so if we actually have a lot of people moving into California because of job security, because of, the environment, and if that number is bigger than, the number of people moving out of California, then, when we just look at the number, the statistics wise, it looks like, hey, we have actually fewer out migration. But you're absolutely right, Mike. There are a lot of reasons why people move out, and there are still going to be, and will be, people moving out of California because of different reasons, political reasons, maybe religious reasons, maybe closer to their kids as well. If their kids actually move, stay in some other states. So I have no doubt, there are reasons other than financial reasons that people move away from California.
Yeah. What are the
Okay.
biggest, I don't know, contradictions? That may not be the right word, or misconceptions of things that you see, because you're in the numbers all the time in California, but a lot of people, they don't understand what's actually going on, what the numbers represent. What are the biggest misconceptions you see that people commonly hold that just aren't true, or are different than what the people expect?
I
Or
think
not factual. Yeah.
Yeah,
Right. I think there are some misconceptions that um, people who are entering into, let's say thinking of buying a home or selling a home, they probably have, the same kind of misconception. And these misconceptions probably have gone on for the last 20, 30, 40 years or so. One thing is, of course, many of you, both of you probably have dealt with a lot of people, for buyers, a lot of them believe, oh, okay, I need a 20% down payment to
yeah,
get into housing, right? Now, of course, if we look at 20% down payment, it's not a small amount. Let's use California as, the median price for California. We're close to a million. We're go like 850,000, whatever it is. 20% is
kills me.
160,000,
Yeah,
180,000. That's not a small amount at all.
Mm-mm.
Not at all. Now, for someone to actually save enough, especially for entry level or first time buyers, that's not a small amount. But the misconception is we don't always have to have 20% down payment. A lot of people actually purchase with a 10%, maybe even lower than that. With a lower number, that would actually make things a little bit easier to get into housing. Now, I'm not
yeah,
suggesting people to just grab the minimal amount and then run into, get into buying a home or be a homeowner. Yeah, of course, you have to look at your own financial capability. But, a 20% is not a necessary requirement, because there are other programs as well that can help people to get into housing, maybe first time buyers program, Maybe there are, the newer program like the Middle Class Home Ownership Act that's being proposed. Um,
Hmm.
the government could actually upfront, loan another 15% of the down payment that you have to pay back later on. So there are programs that could help. And when we do our renter survey, we do that on a yearly basis. When we look at that renter survey, we notice that people have that same misconception as well, and that's why they're not going to housing. And that's the reason why I think they need to consult, an expert in the industry like you guys to get a better understanding of what's out there, what's available. Now,
Okay.
there are some other misconceptions as well. Um, and you've been in the industry for a long time, so 6.5% 30-year fixed rate is probably the norm. It's not a 3% or two and a half
No,
percent, right? You've
we
been in
got
the industry a
spoiled.
long,
Yeah.
right?
Yeah.
Well,
And
I've been around, I was around in the 80s. That was when it
right,
was 17%, 18%. And
right,
I was doing lots of real estate in those days. So when we start looking at the 6.5, I go,
right,
my goodness, that's nothing compared to what we had to do in the
right.
past.
But a lot of people who recently purchased or they have not been in the market for 10, 20 years,
Yeah.
let's say in 2018, 19, they look at even at 4 or 5%, they thought, okay, that's the right amount. And then when it
Yeah.
went down to 3%, thought, okay, this is great. And then a lot of people, you probably encounter many of them, think, oh, it's going to come back down to 5% or
Yeah. Yeah.
4%.
Yeah.
I think that's a misconception too, that
Right.
six
Well,
and a half percent is not the norm.
The difference between the 80s and today is the price point.
Right,
That
exactly.
house that we were operating in was like 30,000, 40,000, $50,000 price point. Those houses today are 350 to 5 to 400,000, same house. So
yeah.
it just makes a big difference on the amortization and the
Oh yeah,
monthly payment for
it
that
is.
property. So,
And the reason that is the case, that we have, I'm glad that you brought up that difference because obviously, the monthly payment makes a huge difference. And the
mhm,
reason why we had a little bit of a run up in price in 2020 and 2021 is because when we had that low interest rates, people were willing to offer a, much higher price, right? In 2020 and 2021 to secure a house, and that push up, home prices by 15%, like each year. And subsequently, when, interest rates started rising to 6.5, 8%, 7% or 8%, then all of a sudden we have a pullback in sales activity. And that's why I said, Joel, earlier that I anticipate slower price growth because I don't
mhm,
think prices are going to come down sharply like what we saw in
mm,
'07 or '08 because
mm,
the
Yeah.
economy seems okay. And obviously, I don't know about the stock market. The stock market could fluctuate. But I anticipate that in order for housing affordability to improve, we need interest rates to moderate, maybe not so much going back down to 4%, but let's say 6% or so. But price growth probably will have to grow a little bit slower than typically, I think in the 80s or in the 90s, we were growing at like 10% every year. Um, Even in the 2000, we were growing maybe about 6 or 7% or so.
mhm.
But I anticipate, in the next, few years, we may be growing a little bit less than that, maybe 1 or 2%. And that may allow wages to catch up, with what's going on.
Yeah. That's what I'm hoping personally is that wages can kind of catch up to
Yeah,
so that and and I think it's gonna kind of be a surprise that real estate will be stagnant and things will shift and then they'll go back and go, oh, okay, I can afford a house now when they hadn't thought about it for 5 years or something.
I know.
Yeah.
And it's hard, when you think of people who already own a house, they purchased like 10, 20 years ago.
Yeah.
Um, it was hard to believe that, back then, of course, it was like a median price was about 500, 600,000. Um, Compared to where we're at now, you look at that and think, hey, that was actually affordable. But back then, people actually thought, okay, well,
Yep.
600,000 is actually pretty high. But look
Yeah.
at where
Correct.
we're at now.
Yeah.
Correct. Everything was high whenever we bought. I remember when I bought my first house, I go, I can't afford it. And I paid 17.5 for it. And I thought, I can't afford this.
Yeah, I know. I know.
Yeah, it's all
But I did
relative.
it. Yeah. Everything is relative,
Right,
to your
exactly.
income.
I mean,
Hmm.
if you have seen, 12%, 13% or 15% interest rates, oh, 6% is actually not too bad. But all that you have seen, if all that you have seen is like 3.5%, 3%,
Yeah.
then, you're not used to that, 6.5.
They're
Yeah,
spoiled.
it started in 2011, so pretty much everyone who uh, began looking, everyone in their 20s and their 30s, when they were looking at interest rates, that they were seeing three, four, five,
Right?
and so 6.5 is a lot. And I think my first loan back in 2002 was like seven and a quarter. And and historically, since they've been tracking it, since the Fed's been tracking it since 72, I think we're still at like 7.7% average overall. So we're still, a point below where the 54-year average is at. So
Yeah. I remember, I had, back in maybe about the 90s or so, I remember thinking about, I need to refinance and it was 8% and it went
mhm,
back to maybe about 7.5. I said, hey, I need to refinance that. And that was 7.5%. And today, of course, it's even lower than that. But of course, a lot of people believe that it should go down to even more. And
yeah,
I usually tell people what happened. Like, is people ask me, okay, so is it going to go down to 3% again? I said, well, here's the trade-off. If you want it to go down to 3% or so, that means your stock portfolio probably will be slashed in half. What do you want? And usually people say, okay, then forget it.
yeah,
Hmm.
right.
Hmm.
Yeah, if they're stockholders.
I
Yeah,
just
that's true.
remember
Yes.
when the rates dropped down to 3%, 2%. Um, we were buying up investment properties and financing them. I just wish I would have done more, bought more, but you can only buy so many.
Right.
But
Yeah.
those were wonderful times. And I remember when I bought my very first house in the let's see, what was it, the mid 70s. The interest rates was 6.5, 6.75. And my dad, when he bought his house, he paid 6.25%, and that was in 1967, I think he said.
Mhm.
And I think, Joel, didn't we do a bunch of research, and the lowest interest rates in the United States was what, 5.5? I think
Oh,
that was the low or was it
I
five?
think Bruce Norris and a
Yeah,
couple other folks went to the Library of Congress, and they were saying like the lowest was like 5%. And I could be totally wrong. I could have misheard.
nationwide. They went
Yeah,
through every
nationwide
publication.
historically.
Yeah,
Yeah, they went back into
5%.
the 1800s. And
That sounds
I
like something Bruce would do.
yeah,
Yes,
yeah,
he did
yeah.
that.
Bruce is brilliant. Love Bruce.
Yeah, yeah. So when you hear stuff like that, you go, gosh, if it goes below 5%, that's historical.
Yeah, yeah. And
And we did.
I think 2011 was when it first time went below five. And it just stayed there forever.
Yeah. And
And
what's the interest rate on your loan, Joel?
Well, it's under three.
Yeah.
Yeah. It
Isn't
starts
that
with a
amazing?
two. Yeah,
Yeah.
yeah.
First
Yeah. And
digit is a two.
you
my
think about
wife's,
it, yeah, and Mike, you said, when rates went down to 3%, that was the opportunity for people who have seen rates, fluctuate. 3% was the opportunity. I want to point out another opportunity that you probably experienced before too, like in 2005, 6, and 7, when prices
Hmm.
rise significantly, and then it started coming down, in 08, 09, or 2010. You probably saw a lot of activities going on,
Yes.
during that time because prices went down by 50%. And of course, for a lot of investors, they saw that as a huge opportunity because it went all the way from 600,000-ish or so in California as a median price to somewhere around 300, 350,000.
yeah.
Correct.
Obviously, a lot of people captured that opportunity, and now, of course, prices have gone up quite significantly compared to back then.
Well, I was overwhelmed. I'm an REO agent, so I had a lot of stuff going on, and I've been doing that business. since 1982. So, gosh, it was just incredible. I was so busy I couldn't even go out and buy my own rentals. I should have bought more, but I mean, it was crazy. It was the Wild West. So,
It's really, the because I've been in the business in the real estate industry for since 2003. This last, 20 some years or so, a lot of things happened, and that's what actually kept me in, in the business, because kept me in the industry, because you observe a lot of things that went on like prior to 2005 or so,
hmm
between let's say 1980s to 2005, there are some ups and downs, but um, in the last 20 some years or so, uh, you saw like two dip, like the great recessions, quote unquote, great recessions in 06, oh 07, oh 07, oh 08. We were speculating back then in 05, oh 06 on how can people afford to buy, when prices actually went up so much?
Yeah.
And we actually created, Joel, you may remember, Mike, you may remember, we have the housing affordability index, but we also created the first time buyers housing affordability index,
right.
because we thought, okay, well, first time buyers actually have maybe a little bit of a difference in criteria and buying a home. But of course, after we create the index, after the home prices actually, drops quite significantly, we then realized people actually just over leverage themselves.
Yeah.
But in the last 20 years, there are a
Well, the
lot of,
banks over leveraged
and the banks
everybody.
too.
Well,
Right,
everyone who would.
right.
Well,
I mean,
they offered crazy financing that people fell for.
Yeah.
The what they call the liar loans or stated
right.
incomes and all that stuff. So a
You
lot of
know,
people got wrapped up into that,
yeah,
and it was not good.
and we didn't know until, of course, hindsight, of course, now we know what happened, what are some of the things that took place during those few years. Movies were made about, what happened.
Yeah.
And I think, in the last 20 some years or so, that's what I learned a lot about the housing market. And that kept me in the business, because realize, that's how you actually learn, by observing what happened. Now, of course, there are, for things like this to happen, and of course, we also have COVID, which we have never seen anything like this before, which actually caused interest rate to come down. So it's, as an economist, that's, opportunities for me to observe. But obviously, there are a lot of things that happened in the last 20 years, and that's why I said some of those incidents, some of those things that happened, allow me to maybe provide some insights that people who might be in the industry for only 5, 10 years may not necessarily have.
So it
Now,
sounds like you're going to be around for a long time working on all this.
I
This
probably
is
will be
job
around for
security.
a little longer. Yes.
so Oscar, what are some of the things that have most surprised you for the 20 plus years that you've been working in the industry?
Good question.
Yeah, that's a good question. Let me think. There have been a lot of things, of course. You know, um, I wouldn't necessarily know at the beginning of, my career that home prices, for one thing, home prices would continue to rise to a
Yeah.
level that we're at right now, to 900,000 or so. So that's one thing. And in a way, until maybe the last few years, the market has, in terms of sales activities, actually has been, somewhat resilient, other than the fact that we have some great recessions.
Yeah.
One thing I know, of course, is despite the fact that, of course, we have some up and downs in prices, home ownership rate still, people still want to buy a home. I noticed that, that's
hmm
something that is definitely um, uh, uh, a thing that people want, an asset that people want. People want to buy a home, not necessarily just because they want an investment. They want to stay in a place. People want to own a home because um, they feel secure.
Yeah.
They own something that belongs to them. Um, and this that resilience you continue to go up. And of course, um, housing demand and housing supply continue to, tighten up. Um, the housing demand actually remain resilient, as I mentioned, but housing supply actually tightened up a little bit, which causes prices to rise.
Yeah.
Um, but and this continue on for the last 20 years or so. Not a complete surprise, but it would be, at the start of my career, I wouldn't necessarily exactly think that that would be the case. Now, the other things that actually might have maybe not surprised me, I shouldn't say surprised, but fascinating to see how it developed is, of course, a lot of things have developed over the last 20 some years or so. When I started, there was no Zillow. Um, a lot of things.
Hmm.
I wouldn't necessarily say that there are MLSs for sure. You can
Yeah,
still look up things online, but I think the few years before that or the 10 years before that, if I correct me if I'm wrong, since you guys have been in the industry for a while, every all the listings are in a book. You flip through pages of
Yep.
listings, and of course, buyers and sellers go to, agents to look for, those listings, and then go from there. But things have changed quite a bit now. Even like today's compared to 20 years ago, people can just look it up on the phone. They can just go to an open house. They can actually use their phone to maybe unlock, the key, to get into a house, to look at the house. Things have changed quite a bit because of technology.
yeah,
Technology has the good side and the bad side. Of course, good thing is make things more efficient, but I do believe that, of course, um, buying a home is actually it's very, very expensive, and it
Yeah.
needs insights for people who
Hmm.
have studied the market, who have seen, the houses, and be able to provide some good insights as to whether, the property is a good property compared to the market, what's happening to the property, and all the other insights. I think the 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 people aspect, I think, will continue on, in the real estate industry. Um, but things have changed quite a bit, and I'm fascinated
Even
by what's happening.
what's interesting is even our vocabulary in our words in the dictionary have changed with technology. I mean, we never heard the word data before. Internet, that's a new word that we've been using ever since
yeah,
technology. And it just goes on of all the different things. Computer, we never heard the word computer until we built the computer. So technology has really affected everything that we do
Yeah, and we
for
wouldn't
for a
be
good
doing a
thing.
podcast
We
or
wouldn't
doing
be
a
no,
video
yeah.
if not because of
right.
technology.
Zoom would have never become
Right.
popular without COVID. You know?
That's exactly right.
Yeah. So
Yeah,
I always say that COVID actually threw us 10 years advanced because I figured with Zoom and the way we communicate and everything, it was going to take 5 to 10 years to really get on with what we're doing right now with Zoom and face to face. But
yeah,
because of COVID, it was instant. It was within 60 days, 30 days, we were all doing this because
I
we
know.
had to.
Well,
Amazing.
let me ask you back. What are some of the things, or maybe one or two things that amazed you, in the last 10, 15 years or 20 years that you never thought that would be the case? Or what are some of the things
oh,
that went
I've
out?
got one right to the top of my head, which is just what you were talking about, the amount and the quality of data. Because I started doing research on other markets uh, in like 2005.
Right?
And I looked back, and this was 5 years, 10 years ago. I looked back at the data that I was collecting then from the census and things like that. And it is dwarfed by the amount of data that we can collect right now. I was just on a
True.
site uh, tracking crime data
Uh-huh.
on different zip codes across the United States and looking at a specific market area. And, the stuff that we're able to do is so, I would have never thought. Even with AI, we're building city reports. I was just telling Mike and I are working on it, and the things that we're able to do now and the amount of data that's out there and that the AI can go and look at 50 different sites. I used to build the right report, which would take me about 50 hours every time I did. I don't know if you ever saw one. I don't know if I ever sent you one, but it
I
was
think I might have seen one, yes.
Yeah, and I stopped doing it back in 2018 just because other people were bringing it in, and I'm trying to bring it back because the I'm not seeing any other good reports that kind of cover the national markets. But even between 2018 when I stopped doing it and now, before it was okay, you take the internet and you scrub the internet for all the different articles that are on there and you go read the articles. Now I can have an AI in
Right.
3 minutes go
Give me a
scrub,
summary, right?
No, three
right, give me a
seconds,
set.
not 3 minutes.
Yeah, scrub, 3 times as many articles about one specific point from, all across the nation on one point of something I'll put into the report. So I fully didn't expect that, the amount of stuff. And Mike and I are able to do really cool stuff. And I look at it and I go, okay, now I feel like I have enough information to be able to gather an understanding of the marketplace.
But it does,
Yeah.
I'm glad that you point out, the ability of AI. And while I use AI myself, and I believe, the productivity of AI, I do believe, like what you mentioned earlier, Joel, or just now, Joel. Um, you look at the data point, and it has to pass through the taste test because
Hmm.
AI
Yeah.
obviously can give you a fast way to get all the information, but if not, because you can take a look at those data and see if it looks right or it makes sense, because based on your experience, based on what you have learned in the past. For someone who just graduated from college, and may not have the experience that you have. It may be, if you take that one data point and use it, it may not necessarily be, as insightful. I
Yeah,
think it
well,
requires that human
they're going to
perspective.
get totally lost.
Yeah.
Yeah.
The
The
human
reason
perspective
Yeah,
has
the
to be
reason I say
involved.
that is a lot of the data points, I collect the data points myself, and this is what I found because I'm trying to put the right report together again. And so what I found is when I ask the AIs for the data points, it brings me made up information.
Right.
I even last week I was trying to get something. I was trying to get a list of different zip codes from and do population. Just asking the AI to do population from the census for a list of zip codes, and it couldn't do it. It ultimately came back, and I appreciated it coming back and saying I can't do that. Right, because
Wait,
I've seen it where it just makes up numbers, and then I go and check. I go to the
mhm.
census and go, yeah, that's not right at all.
Or if you ask the right questions, if you because you have some insights, you have the knowledge of where to go to look for some of the statistics, or actually tweak your questions a little bit,
Yeah,
so that it will look. I think, as of now, as of today, of course, tomorrow, a year from now, things could be a little different. AI still needs, help, from human to ask to prompt the right question. I think that's important. Obviously, I hope that actually we continue to play a big role,
yeah.
and
Hmm.
and not let AI take over everything. But the way that things have been going, I think we need to keep an eye on the
Hmm.
development.
Yeah, and I find it assimilates very well. So it takes all the numbers that I've gathered, and then I say, okay, analyze this, and it inevitably gives me insights I'd never thought of,
Right,
or
right, right.
I could do the same thing, but it would take me 30 hours to do what it can do at 10 minutes.
Exactly,
And
exactly.
so yeah, it's really cool, and
That's
and it's
fascinating.
growing, and it's changing. What it was 6 months ago, it can do way more now. So.
It's
Hmm.
it's developing very, very fast. I have
Yeah,
to.
but for the numbers, what do you use it for the numbers when you're looking at that?
And I'm glad you asked, because I do, now for the data that I use on a regular basis, I already have my things on at my fingertip. But
Yeah.
when I need to prepare, let's say something like a global housing market outlook,
Mm,
I don't necessarily know, where, the housing market is for Australia, for example. I ask AI to actually collect some information. I look at how they compare to the economy, as well as, the U.S. number, and then it was able to, because it's a global economic outlook. I need to prepare, let's say, 10 slides for 10 different countries. If I were
right.
to
Hmm.
actually have to collect every single one myself, it could take hours, 40, 50 hours. But
Yeah.
with AI, I
Per
could be able
slide.
to, yeah. And I was able to do it, with with some concise and even ask, not just collect data, even ask AI, create a slides for me based on this data.
Hmm.
And it was able to do so for me in a short amount of time. Of course, it does require me to look through everything and make sure everything looks right, delete some bullet point if I don't like those, and change some of the graphics if I don't like those. But it does help me, put something together as at a much faster pace. So that I
Yeah.
appreciate. And
Hmm.
it's true, like what you said, Joel. It pulls something up that I wouldn't have thought of. So that's, I think, one thing that AI is very good at is it allows me to it pulls all the different ideas for me to actually go through and kind of think about it.
Yeah.
So it helps that way for sure.
Yeah.
Yeah, you
It
don't know what you
accelerates a
don't
lot.
know. You don't know what you don't know until you know it.
Yeah,
Exactly.
it's true. Well,
Yeah.
Oscar, thank you so much for sitting down with us today.
Yes. It's been a absolute pleasure.